Hey guys, this is Dave with Moniology. Hope everyone has had a great week. This is the weekend market review for March 10th and 11th, 2018, where we go through some of the most important sectors in the markets for multiple time frames to get a better sense of where we have been, where we are, and where we're likely headed in the future. Let's take a look at what the markets are showing us today. So we'll start off with the 10-year U.S. Treasury. And just for those of you who aren't familiar with this index, 28.94 is where we closed on Friday. That's an equivalent to 2.894 on the 10-year Treasury yield. And I pointed out last week that after this pullback, it looked like having found support on the 50 RSI, which is a very important zone, we're going to rally. And sure enough, I said we wanted to rally towards 2.9 this week, and that's basically where we closed. And we're testing this underbelly of the 60 level resistance here, and I think we're going to break out next week. And so we're bullish on the 10-year Treasury. Now looking at the weekly chart, which is why one of the biggest reasons why we're so bullish is, we're riding this middle Bollinger Band higher, and we have positive divergence that's starting to take place here, and looks like we're setting up for a breakout above that 3 area very soon. And I'll point out this positive divergence here. Well, on a monthly basis, the positive divergence, the longer the time frame, the better the divergence signal. And here we are. We're at 28.94. RSI is at 68.30. Last time we were at 29.84, and RSI was just a tad above 60. So here we have a very, very important positive divergence, which suggests that this particular move here is getting ready to break above 3, and certainly will test the 200-month moving average of about 3.45%. What that does to the markets will definitely remain to be seen, but this is a very bullish development for interest rates, and negative for anything that's inversely correlated, such as dividend stocks, utilities, and bonds. And so here's a look at the gold daily chart. And gold had a very important bounce this week on the daily, closed above the 50-day moving average, just below the middle Bollinger Band. Looks like it wants to start moving higher. If you look at the MACDs, or the PPO in this case, it's creating basically a tighter and tighter band between the two moving averages, and looks like they're starting to curl upward, which is a very positive sign. And we're right below the 50 on the daily RSI, but it looks like we want to move higher very soon. Looking at the weekly, we found support above the 50 on the weekly RSI, which is very positive. That's basically the area where we broke out above last time we started this rally from 1238. So now we found support, and then no surprise, there was the middle Bollinger Band support, there was the 50-week moving average, and the 200-week moving average. This was just a very, very high-quality pullback, and looks like we're starting to prep a move higher here. And bulls want to see a move higher next week, because MACDs are basically hovering above 0. If they curl below 0, then we might have a couple more weeks of pullback, or potentially just consolidation with time. However, if we curl back higher, that could be a very powerful move towards that 1400 level, which is so important to break for gold bulls. But stay tuned for a very comprehensive precious metals video this weekend, where we'll point out some of the top names in the sector, as well as just analyze gold, silver, platinum, and so on. Gold monthly, we're very bullish on this, because this is a multi-year breakout here of a five-year correction, and this is very crucial. You got the sidestep momentum move higher on the RSI, and it's just a matter of time before it breaks above 1400. No one can tell exactly when it's going to happen, but it will happen, and when it does, it's going to be beautiful if you are long. Junk bonds on the daily are looking actually very, very constructive. We had multiple attempts at breaking above the 50. We closed above the 50 on the daily RSI. We found support on the 200 moving average. The middle Bollinger Band is curling higher, and really the only resistance above is the 50-day, and it looks like it's getting set to break above that. On the weekly, we found support on the 50-week moving average, and so far so good. If we can break above this 50 level on the weekly RSI here, this is going to make a nice run. It probably is going to make a run to retest The all-time highs here around that 37 zone. So some good developments for junk bonds, and really it's a sign that the economy is actually doing very well and rather healthy. And by this is going to be interesting. What happens here is on the monthly junk bonds, is it going to break back above 70, 69 to 70 area and become overbought again? And that's again when the biggest moves do occur, when something is overbought. And if it does, that's a very positive development. If, however, this starts curling back over, then it's actually a negative development longer term. So we'll see what happens here. I will point out that the MACDs or the PPO are in negative territory. That's not a positive development, but on its own, it's not an indication to sell, because we saw here we had several months of negative PPO, and yet basically after a little pullback, we had a very nice run in junk. Crude oil daily. Crude oil, this looks actually pretty good right now. I'll tell you, it found support here at this 38 level, which is the area where we bounced off last time around. So we had a strong close into the week around that 62 level, above the middle Bollinger Band, above the 50-day moving average, and above the 50 level on RSI. It looks like it wants to move higher, especially with PPO starting to curl towards break of the 0 level. The crude weekly chart suggests that it's building this pullback here that I thought might actually pull back ultimately to this 50 area at some point. It looks like it wants to move higher. Now, it still might get to that 50 level, but it might want to make a run towards 70 beforehand. With PPO in negative territory, I don't think we're going to go that much higher, but it's finding support here. So if you're long, stay long, and if you're not in the position, there might be some good opportunities in energy. This is what I was looking at here. We found some resistance at that 60 level on RSI. We kind of pulled back. I thought we'd pull back to the 50 on the monthly RSI, which coincides kind of with this middle Bollinger Band. But there's a lot of strength here, and there's a ton of support. There's the 50-month moving average of 59.5. There's the 200-month moving average at 62, which we're just hovering above, and there's the middle Bollinger Band at 53. So a lot of support to the downside. I will say this move, the momentum is kind of falling off. The volume is decreasing, but that's not necessarily a sign that things are going to turn lower. Nasdaq looks very strong here on the daily. It's gonna be interesting to see what happens when RSI tests this basically the level that it's at right now. This is where the breakdown happened, right about here. So is this going to run into some trouble next week? We'll see. You look at it on the weekly time frame, it's making new highs, but momentum is not there. So it's going to be very interesting to see. You might have a couple more percentage moves higher, but if momentum cannot break to new highs, this move here is just a snapback rally, which will ultimately fail. And frankly, from a pure technician standpoint, this is a bearish flag here, where you basically pulled lower, and then you're flagging higher with negative divergence on momentum. So stay very, very careful here about just going long on pure technicals. And looking at the monthly chart, still exceptionally overbought. We're retesting the underbelly of this wedge breakdown here. So we're at new highs, and we're extremely overbought. If you're long, stay long. So long as we're above 7,000, there's no reason to suggest that we're in any form of bear market. Any correction is assumed to be just a short-term pullback, so long as we're above that 7,000 area on the Nasdaq. Russell 2000 looks pretty good on the daily. Looks like it wants to make a run back towards that 1620 level here. You look at it on the weekly though, and again, negative divergence. It's going to run into some at around 1620. It's going to run into some trouble. What it does there will ultimately determine whether we break to new highs or ultimately head back lower. Russell monthly looks good. It recaptured this level so far of that 70 RSI. So if it can maintain this on a monthly basis, that's a very constructive and positive price action. But the PPO is diverging. It's going into negative territory. So that's something to keep an eye out for, because it might take a couple months, because this is the monthly chart, long-term chart, but ultimately this might be just a broadening top, which means that the decline might be pretty strong once it does occur. Again, S&P daily looks very strong. The weekly, not as strong as the monthly, but it's testing this underbelly of 60-61 area at RSI, which is very important. It served as resistance multiple times. If it breaks higher, looks like it's going to make a run towards that 69-70 level, and ultimately will probably lead to new highs on the S&P. A couple more charts here, guys. The S&P monthly, nothing to see here aside from the fact that so long as we're above 2,600 on a monthly closing basis, this is still in a bullish uptrend, though PPO is starting to show a little bit of a decline. The dollar, it's consolidating here very comfortably above the middle Bollinger Band. Looks like it still wants to make a run towards 92. Let's see what happens here in the coming weeks. The dollar on the weekly chart, so long as it's below this 92 level on a weekly basis, I'm still favoring the downside. This 40 level is strong resistance on RSI, and I'm not sure it's going to take it out at this point in time. However, look at PPO. It is curling higher, so what happens here will be very important. Does it break above zero, or does it start curling lower? But it's coming to an inflection point that's very important to consider. Finally, on the monthly, the monthly looks very, very weak, and this is why I'm still of the opinion that we're going to head towards that 80 level before we ultimately bounce, and we'll see how strong that bounce is. The 50 and the 200 month moving averages are curling lower. The middle Bollinger Band is curling lower. A lot of overside resistance and supply. So stay tuned, but I'm not confident if I'm a dollar bull. The VIX so far found support around the 200-day moving average, but it looks like it wants to move lower here. It's being shorted again, and if it breaks below that 40 level on RSI, likely heads lower, which means the markets are likely to head higher. On the weekly, it's found support so far on the 50 RSI level. What happens there will be very, very interesting. If it can hold and curl, that will suggest that maybe this is just a pullback and it's moving higher. This is potentially a bullish flag. However, if it breaks below this 13 level, then potentially we're in another leg higher in the markets. And on a monthly basis, so long as we're above 50, that's very bullish and constructive. If we break below 50 on a monthly, then so long to this particular pattern that we've been watching. But my hunch is this is going to find support in the coming weeks, and there will be more volatility in March. I would not be initiating new long positions here in the markets unless you're using very tight stops. The world markets, this is a weekly chart. Looks pretty good here. It looks like it wants to bounce. How far this rally goes, I would say towards 2100 is very likely. Fills this gap here, but ultimately I think it moves lower. And on the monthly basis, this is the weakest of the charts, and so I think we're likely to move lower longer term. Anyway, guys, thank you very much for watching. I hope you have a wonderful weekend, and let's see what happens in the coming weeks. Take care.